Hello, I'm Cameron Brio from Power Team Realty in Moncton, New Brunswick. Today we are going to look at a real estate investing opportunity. A lot of investors are sitting on the sidelines right now as it is very expensive to borrow capital. We are up almost double in borrowing year over year, and as such, a lot of deals are not attractive. So I thought I would take a minute to look at a deal high level, perhaps pick out a few things that you could impact on a deal to make a bit more sense in your financial model. Now, I should let you know that all investing does have an element of risk. Real estate investing is no exception. What I will try to highlight is a few key tools that you could use in help understanding and assessing that risk. Perhaps this is basic for you, but if you do have any questions, please feel free to leave a comment down below or reach out to Cameron@powerteam.ca, and I'd be more than happy to talk shop with you or share a copy of the tool that I will be using today. Now, the deal that we're looking at has been on market. It is a 5-unit building, mixed commercial space with residential, as well as a parking pad that supports 2 properties. But for the purpose of this example, we're going to look at the green building as well as the parking pad that can support that property. I have gone ahead and populated a few of the details, so I might glaze over things a little bit quickly. You can pause or screenshot or simply reach out looking for those details. Again, I'd be more than happy to share. So today we are looking at this property, and when I look at a property, I want to understand high level, what are some of the things that from photos I know about the property? What could I change, improve, perhaps have the tenant take responsibility for? So looking really quickly, we do see that perhaps this is a new roof. Windows, it's a little bit challenging to tell what type they are. I know that these are big windows down here, so those could be expensive to replace. Just taking a look at the site from outside. So parking could use a resurface, perhaps the lines to be repainted. Nice deck area out back, that could be a good shared space. It looks like we're moving into a residential unit. So what I'm looking for in here is, can I understand what type of windows they are, what type of heating system is here, is there a ductless product to add heating and cooling, is that something I could do? Again, I'm making a small sheet just off to the side of things that I can see and questions that I would want to ask, whether that's the listing realtor or the realtor of your choice. So uncovering some of these details, it looks like we're moving from a residential space into a commercial type space. Okay, it looks quite big. Okay, one thing I'm noticing here is this does not look like a full wall. So perhaps there's the ability to make this a little bit bigger. So I'll make note of that. It looks like these are just big plate glass windows framed into wood. So I'll make note of that. That could be something that has a cost down the line that I want to be aware of. Now I'm moving up into the residential units. The hallways look in good condition. I see a baseboard heater, mailbox for the mailman. Entry doors look good. Okay, so it looks like one big open room that could be partitioned into 2. And just backing up here, it looks like there's a closet over here. So perhaps this could be a 2-bedroom suite, and that could impact the rent down the line. Kitchen is big. Oh, some shared space outside. Or perhaps that's just a deck for that one unit. Bathroom is in good shape. Looks like a laundry area attached to the unit. Great, some carpet in the halls leading up into this unit. So that might be something that needs to be replaced. Again, I'm going through high level, looking at what could be repaired, impacted, changed. Okay, commercial space. Looks to be in good shape. I would assume that that tenant would be responsible for it. They've got an air conditioner unit on the wall. Baseboard heat. Oh, we've got a floor plan here. That looks good. Barber shop. All right. So high level, I understand the property. It looks like an older building. I'm not seeing a year built, so that'd be something that I would want to ask about. I do see that there's over 4,000 finished square feet. So maybe cost per foot model might apply here. Maybe there's the ability to subdivide some of the units. Again, I'm making a few quick notes. See that it's 5 to 8 units, municipal water, paved, electric. Okay, so perfect. Now, a good rule of thumb that a lot of investors will use is the 1% rule, which is 1% of the purchase price. That should equal the gross monthly rents. I like to use that. It's good for conversation starter. Again, high level without really diving into the property and seeing what you could do to it, to see what it already has existing. It's kind of tough to understand if it's even the right fit. But again, the 1% rule is a good jumping off point that gets us further down the road. So looking here, I do have populated and the other listing of lands. So we have 126,500 for the land, and we have 407,500. So we're going to put those together. Now there are an income and expense document here that the owner has provided. So it has a lot of the pertinent details: snow, insurance, a maintenance number, power, water, tax. Looks like it's hitting a lot of the main points here. But as an investor, you would like to be optimistic that perhaps there are some things that you can impact. One of the things that I noticed and have transferred over here is projected. So does that mean that it's vacant or the owner's willing to rent? It's a good middle ground to start a conversation. For argument's sake, let's go with the owner's willing to rent. So we populated our values here on our parking, our 2 commercial units, as well as our 3 residential type units. It's giving us $52.48 per month. And we'll stop here. This is a tool that I specifically like to use. It collects all of the data that allows me to see high level all of the things that are moving parts in my investing. Right here, cap rate, debt coverage ratio, and gross rent multiplier, as well as monthly cash flow. Those are all high level things that I look for. You might look for other things. Again, completely subjective, all great tools. It's allowing me to understand the risk that's involved. So I've pre-populated these. I've added the 2 items together. We have the building and the land. So we have our price. Now in the greater Moncton area, we do not really have a 2% vacancy rate, but for the purpose of analysis, I will assume that if the market conditions change, I have the ability to have some flexibility. Now the mortgage amount in our mortgage calculator, we have the incorrect interest rate. So we will go at 6.4%, which calculates our monthly payment. So when we come back over to our analysis tool, we have a accurate data. This is the monthly rent multiplied by 12, pretty simple stuff. And we have the various utilities broken down. Now, in terms of analysis, there are some subjective items on here that perhaps you could impact. Now, I will make the assumption that at $4,800, there is some electricity being paid by the owner. Perhaps that could be transferred over into a new tenant lease. Makes things a little bit more clean and simple. It also creates accountability for the tenant not to abuse it. And what type of abuse happens? Well, we have cold winters, and sometimes a tenant wants to open the window to get fresh air. Well, that could be expensive if they do go out for the afternoon and the owner is paying the power. Water and sewer were taken from the spreadsheet that was provided. Taxes were the land as well as the home. Repair and maintenance. We'll pause here. This is a subjective number, and I really like $2,500. What I feel this would allow me to do is to change the locks, perhaps master keying the building, painting, fixing some small minor deferred maintenance that maybe a tenant mentioned the previous owner not doing, and maybe something unforeseen like a cleanup that could pop up right after closing. I want to make sure that that is built into the deal so you're aware. Insurance, this is going to be a subjective item based on a few key factors. Now, an insurance broker can break down what those key factors are, but if you are an investor investing out of province or out of town, a lot of insurance companies will require you to have a property manager with eyes on the property. Now, some property managers will even offer tenant insurance, which could help you lower your monthly rate. Property manager, this figure could range. I feel that 8% is very accurate for our market. That should be a full service property management company. They'll be collecting your rent, helping you pay the bills, as well as fill vacancies. Now, filling vacancies traditionally does come with some additional costs, and I would encourage you to reach out to a property manager. We do have the snow costs. I did not see any lawn on this property, so that's not to be a concern, But snow, the only variable that I see is additional snow dumping. And what that means is that a company would come and pick up the snow from the property and get rid of it. So the final items on here are the various monthly payments, loan amounts, and we're seeing our net operating income expressed as a percentage. And back up here to my cap rate. Now, this cap rate at the time of recording this video does fall into the appraiser's averages. A existing construction should be around 5.5% in the greater Moncton area. It will range all the way up to 6%. Obviously a good deal right now. 6% means that the purchase price should be a little bit lower. So negative cash flow. One of the items that I'm going to look for is at least $50 per door cash flow. Personally, that's something that I feel is a good number. Now you're probably thinking, why not hundreds? Why not even 1,000? Well, it simply is not reasonable. We do have a high interest rate right now, so that is going to affect things. In a few years, should that interest rate go down, you could simply refinance the property and this cash flow number would be greatly impacted. Or you could start looking at a few things like the electricity. So perhaps this could be brought down to $2,500 and we'll see that there is an impact. So we're getting close to zero. We are seeing that the cap rate is getting better. So perhaps we could also look at something like the rent. We do have a possible vacant unit. Perhaps $1,250 like the others might be more reasonable and we could see how that impacts us. So we're at $5,445. And where were we over here? Alrighty, so now we have some cash flow per door. So as you can see from this calculator, there are a few things that you could impact based on vacant units, based on a few accounting items, looking at your expenses that could be tailored to suit your investing goals. If you got any value from this video and you'd like to learn more about real estate investing, there are a few ways that we can get in touch down below, and I'd be more than happy to discuss your next steps in your real estate journey. So based on what was reviewed in this video, I do think that there is a deal to be had here. We do have a list of critical questions. The next step in this process would be getting answers for those questions and potentially booking a visit, whether in person with the realtor or virtually with the realtor, to see a few more things in greater detail. The purpose of this video is to provide high-level context, a few of my own opinions, as well as some of the tools that you would use to analyze a deal to get further down the road. Thanks, and have a great day.